Well, let's get to our first management on the show. Max Healthcare, that's the first corporate we're talking to today. The hospital revenue looks strong, occupancies as well, at around 78%, and the average revenue per occupied bed as well moved up pretty strongly. To discuss the performance, the outlook from here on, we're joined by Dr. Abhay Soy, the chairman and MD of the company. Hi, Abhay. Morning. Thanks so much for joining in. Congratulations on a rather good set of numbers. My question to you is, occupancies have moved up to around 78% odd. Do you expect that to be the number that we should be working with regard to occupancies? You could give us a broad band. And the other factor is your revenue mix. You know, it's turned around, as you have been indicating. Institutional contribution has come down, while international contribution has moved up. With that sort of a backdrop, what kind of an average revenue per occupied bed we should be looking at?
So what we are coming off, and typically the second quarter is, the viral season, the dengue season. So what you tend to get is a lot more medical patients. And this season is characterized by two things. One is higher occupancy, which you saw. And the second is because it's only medical management, it's not really surgical management. You have a little stress on the RPOBs. So therefore, what you saw is RPOBs were sequentially flat last quarter to this quarter, whilst you got the benefit of the higher viral load, etc., and occupancies were higher. Both of these combined, because higher occupancy does give you some operating leverage, and therefore we've had another quarter of all-time highest revenue and EBITDA.
Right, Abhay, so just what is the guidance on, as you said, yourself said, RPOB quarter on quarter is flat. Where does this move from here in the second half of this year?
So, typically a second half of the year is usually better than the first half of the year, marginally better than the first half of the year. So what you're going to see is, of course, as far as occupancies are concerned, it's you're not going to have a 78% kind of occupancy when you come off the season in the first quarter, in quarter three, but you will have higher RPOBs compensating for it because you've got, a better surgical mix, more surgical patients, which typically tend to pay you a higher RPOB. I think this coupled with the fact that we are also seeing extremely high clip of recovery as far as our international business is concerned. We are already back to more than 110% of pre-COVID levels. And this is whilst, Afghanistan, which is one of our key markets, which used to be 12% of our total business, is really down to a trickle right now, is down to zero, because the Indian embassy is not really issuing many visas over there or any visas over there. So once that comes back, we're going to see a massive flow in through that geography as well. So yes, I think, occupancies will move up marginally from a base rate, but you will definitely see a significant move up as far as RPOBs are concerned.
Okay, just some more numbers. RPOB, just for the uninformed, is the average revenue per occupied bed. And over there, as we were telling, our viewers earlier, you've done very well, 66,000 rupees this time. But now that you're seeing perhaps medical tourism also return in a big way, as you said, international patients could come back in a big way over the next many months. From this level, what kind of sustainable growth do you see by the end of the fiscal on the RPOB?
Well, we're not giving any guidance in terms of top line and bottom line. But having said that, what I can say is this is not a one-time sort of performance, etc. We have some levers coming through in the near term. Higher throughput of international business is one. Lower sort of dependence and reduction in institutional business is the second. And both of these should play out in higher RPOB, coupled with the fact that now you're getting into the winter months, which are more surgical and more surgeries, etc. And that's what we've seen typically in the past as well, that the second half of the year is, usually marginally better than the first half.
All right. Could you give us a number, Abhay, on that institutional contribution? It's moved down from the mid-30s. It's come down to sub 30% odd. In revenue, obviously, it'll be less. But what's the targeted number out there?
So I think over the next 4 to 5 quarters, we should have it below 15%.
Oh, okay. From this 28% odd mark.
That's right. So you've seen over the last 3 quarters, it's been brought down from 37% to 28%, but now from 28 to 15 will be over the next 4 quarters.
Abhay, just briefly, you in the first half of this year, you've spent some 40 crores towards sort of capex related initiatives. What is the plan for the second half? Will that number be significantly higher?
Yes, we are looking at 400 to 500 crores to be spent in the second half of the year. We are looking at the first 100 beds to be commissioned by very early on, in late current financial year, and then another 300 beds to be commissioned. This in Dwarka in very early on in the next financial year. So you're going to see about 400 beds come on stream. I think in the near future, and which are pretty much in line. And other than that, we are incurring capital expenditure towards some of other projects as well, where the visibility is good and expenditure should go through as well.
Okay, all the best, Abhay. Thanks a lot for joining in. That's Max Health. The occupancies are very high. This was one of the worst flu seasons we've seen